Well, first of all, I lead a bank in Norway, and Norway has, just for a very brief period, been at zero interest rates. And coming into the pandemic, we actually had a reference rate of 150 basis points. So it's a little bit different than comparing to the Eurozone. And the Norwegian central bank has actually been quite clear of having no desire to move into negative interest rate, and they started hiking in September 21. So them, along the New Zealand central bank, were the most rapid to start hiking again. That being said, it's also been the case for the Norwegian central bank that they have had to up their estimates, and the most substantial hikes have come during the autumn of 22, where they have hiked on every central bank meeting in the autumn. Has it come as a surprise? I think yes, to everyone. I think nobody have been able to predict what we've been seeing. It's clearer now in hindsight, always easier to see. But I think we are, I think central bank policy also differs compared to the structures of the market, and we are a floating rate economy. So it very quickly floats through into the market. I think this is one of the different characteristics now, also compared to previous economics eras where we have seen the same type of movement, that more economies, at least in Europe, have floating rate structures. It's good for the efficiency of monetary policy as long as it's not a degree of vulnerability that leads to that really tripping the consumers and leading to other kind of undesired effects. I think in isolation there is a lot of positive things about not having negative interest rates, but of course for banks we live in coexistence with the economic environment. Increasing interest rates is positive only if it doesn't kill growth long term. I think short term, that's not the issue at the moment. And of course, if it doesn't lead to instability and losses that has a magnitude that surpasses the increase in interest rates.